appears that Robinhood is being bailed out after taking on heavy losses. But what does this mean for the AMC squeeze? And potentially more importantly, what does this mean for the wider market? Well, stay tuned and let's make some money. Now I want to dive straight in with the key information. So, you may remember this video from a few days ago titled Robinhood going bankrupt will cause the AMC squeeze. I spoke about how recently Robinhood has been taking on massive losses and is experiencing liquidity issues. And it's just been revealed that Sam Bankman-Fried's FTX is reportedly seeking a path to acquire Robinhood, according to Bloomberg. Now, FTX may be planning to take Robinhood private again, but it seems like FTX is offering yet another bailout lifeline. The article says Bankman-Fried's FTX is seeking a path to buy Robinhood. The FTX chief said that he's excited about Robinhood's prospects. FTX is deliberating internally how to buy the app-based brokerage, one of the people said, asking not to be identified because the matter isn't public. So far, Robinhood's co-founders currently own more than 50% of Robinhood's voting power. Obviously, a massive chunk is listed on the stock exchange, but back in May, Bankman-Fried disclosed that a company he controls, Emergent Fidelity Technologies, bought a 7.6% stake in Robinhood. So he's already offered a $648 million lifeline by buying this 7.6% stake and could be debating or could be in the works of purchasing the rest. Now, Robinhood have taken on significant losses over the last year due to many silly mistakes or many bad choices on their behalf, which has reduced their revenue, and general inflation and the current climate increasing costs. Robinhood's stock has fallen by over 75%, maybe even 80% and above since being listed, and Robinhood is likely struggling with all of the additional disclosure requirements as a result of being a public company. It's now more difficult for companies like Robinhood to hide these sketchy conversations with companies like Citadel, and therefore they likely want to go private again. Now, you may know that Sam Bankman-Fried has been involved with a lot of crypto companies lately, and his newest endeavor is trying to take over Robinhood. Now, you may remember that FTX just handed out a $250 million loan to BlockFi through their trading company Alameda Research. FTX is also debating about a large investment and potentially buying out BlockFi as well to further bail out the company. On top of that, Alameda Research, or FTX, also provided a $500 million loan to Voyager Digital. Now, this Voyager Digital company had a massive $720 million loan to Three Arrows Capital, which has obviously just defaulted on that loan. Three Arrows Capital also had some massive exposure into Luna and also into Celsius, which has recently paused withdrawals and looks like it's going under. You've also got a number of other crypto companies like Nexo, BitMEX, Finblocks, potentially Coinflex, and many others that also had exposure to Three Arrows Capital and to Celsius as well. This is obviously a giant part of the crypto industry that could come tumbling down over the next few weeks. And considering FTX, or Alameda Research, has a giant exposure to a number of companies on this list, like BlockFi and Voyager Digital, and will soon have massive amounts of exposure to Robinhood as well, it's not looking too good for FTX, for crypto as a whole, and also the stock market too. Obviously, the more exposure that FTX builds, when it all comes crumbling down, FTX and all of the companies on this list will end up being liquidated. This will obviously have a massive impact on crypto as a whole and will likely cause Bitcoin to fall below 10k, potentially even lower, and will implode a massive portion of the crypto market. And obviously, as I've stated before, tons of other hedge funds do have exposure to this crypto market, and therefore when the crypto market tumbles, so will these hedge funds. That will lead to more liquidations in the stock market, leading to more hedge fund liquidations, potentially leading to those hedge funds that are shorting AMC but are long on a number of other stocks also being liquidated as well and forced to close out of their short positions. But it seems like Robinhood are increasingly struggling more and more and are now in need of a bailout, potentially from FTX. And this article from Reuters says that Robinhood at $0 per share would start to look cheap. And if you didn't already know from Moomoo's latest customer agreement, they officially state they do not sell your order flow and they do not benefit financially from your orders. They state they don't sell your order flow to market makers like Citadel because they clear their trades themselves, as they have their own clearing broker, Futu Incorporated, which again doesn't sell order flow. And if you sign up to Moomoo right now using the link in the description below, you can currently get 10 free stocks worth up to a total of $25,000 and a guaranteed free share of Lucid on top of that. Therefore, Moomoo is brilliant for buying those AMC shares. It says Robinhood Markets' reversal of fortunes has been dramatic. The digital brokerage went public in July with a valuation of $32 billion, yet by last Friday it was worth just $7 billion. It says if you strip out cash on its balance sheet, Robinhood has at various points in the last month been worth less than zero. Trading by its customers has slowed dramatically. Revenue of $299 million in the last quarter was almost half what it was when Robinhood came to market. Most importantly here, it says other companies, if they owned Robinhood's customers, may be able to do that too, but better. And therefore it seems like FTX may be considering to take over Robinhood solely to acquire Robinhood's customers and to continue those sketchy relationships with market makers like Citadel. This could create a massive in for Sam Bankman-Fried with Citadel and with its owner Ken Griffin. This way Sam would have direct communication with Ken Griffin and could basically do anything in the crypto market. I think it'll be interesting to see whether FTX can make this investment and make these connections with Citadel before FTX and potentially the entire crypto industry ends up blowing up. Speaking of which, as Edward Burchuk tweeted, he said the SPY or the S&P 500 has been propped up so much by the plunge protection team that eventually it will just get smacked down. Over the last week, we've really seen the plunge protection team propping up the market, bidding the S&P 500 up more and more every day last week. However, as I've said, I do believe the next leg of the market crash is just around the corner, and I do expect it to happen over the next few weeks. Edward said this leads me to believe they're trying to push the market up as high as possible before a crash occurs or before the next leg occurs or when they feel they're ready to liquidate. As Mac10 tweeted, he said every market peak in 2022 has been the last week of the month. We know the plunge protection team tried to prop up the S&P 500 back in March, ready for the Q1 announcements to make the market crash not seem so bad. I think that's exactly what's happening last week or this week as well. The plunge protection team is again stepping in to try and bid up the S&P 500 to make it look like it's only fallen by say 18 or 19% and hasn't yet entered bear market territory. However, after the Q2 figures are released in the first few weeks of July, the S&P 500 will likely fall to new lows and maybe down 30% or more. But as long as these big funds don't have to report a massive loss in Q2, they're happy. The plunge protection team is happy as well. The S&P 500 gets bid up for a short while before the next leg of the crash unfolds. Clearly, the plunge protection team is propping up the S&P 500, trying to generate additional margins so funds can avoid these margin calls and prevent not quite horrendous Q2 results. However, it's likely that after the end of this month actually happens, the market crash will continue and we will fall to new lows. An Unusual Wells has tweeted saying Peter Bookvar, the Chief Investment Officer at Bleakley Advisory Group, has said the odds of a recession this year are 99%. And he said it's only 99% because nothing in life is 100% certain. Clearly, Peter is very, very confident in the recession, almost 100%, but only 99%. Something I found very, very interesting is Beef Supreme's links between the DTCC and their waiving of margin calls and what recently happened back in April of 2022. Beef Supreme said knowing what we know about the DTCC involvement back in January 2021, aka them waiving margin calls, was this them as well? The market was crashing and AMC was flying back in April over $34 per share. And he said, did they turn off margin calls once again? He said, how can anyone trust that they're not purposely bailing out firms every time these firms are in trouble? As Mosquito said, AMC got halted because we broke out of this downtrend, which is potentially the margin call trend line, and the halt saved their asses. I did say back in April that if AMC ran over that $30 region and closed over that $30 region for a few days, that we would see some massive liquidations. Obviously, AMC was halted at that point and then fell below that $30 region very, very rapidly, but it may, once again, have been the DTCC waiving those margin calls. Maybe we did actually see margin calls happening and taking place, but again, they were just waived by the DTCC and the stock was halted. Something that I think is very, very embarrassing on the DTCC's behalf. Yes, they haven't tweeted since the 15th of June, but what they have done recently is they've just turned off comments on all of their posts. Only people the DTCC have tagged in these posts, which is obviously no one, can actually reply to them, and therefore nobody can currently comment on the DTCC's Twitter tweets. Clearly the DTCC knows they're in the wrong, they know they're propping up these failing hedge funds, and they know they're waiving margin calls left, right and centre. They know that it's bad, but all they're doing is turning off comments and not actually resolving the problem. I do believe the DTCC, the SEC and potentially all of these acronym companies are affiliated and are also guilty of propping up these failing funds. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.